All right, welcome guys to our YouTube channel where we are focused on raising capital, investing with purpose. So whether you are a new investor, an experienced investor, or looking to buy a business, understanding the art of raising private capital is crucial in today's competitive landscape. Join us as we navigate the complex realm of attracting investors, securing funding, and building meaningful relationships that fuel your business growth. All right, welcome, guys. We're so happy to be here. I think we're happy to be here every day. I'm your host, Kalisha, and I have my co host, Betsy. Um,
Hey,
we're going to be sharing some great insights today on a PML who backed out last minute after the paperwork was drafted. And we're going to share how we handled that. But before we even dive into all the tea, let's review our disclaimer with you guys.
yes, you guys. The following information is for educational purposes only. Please do your own due diligence. We do not provide professional, financial, or legal advice.
Yes. Yes. Don't. So this is just our experience. That's it. So don't hold us accountable to say, well, Kalisha and Betsy said this why XYZ on our YouTube. No. Full disclaimer, we're just sharing our experience. So we're gonna just talk about a deal that we had. And this deal was in Texas. And we were looking for funding. And
Yeah, and I just want to say, like this one, it was beautiful, right at the beginning. It was like last minute, you found someone, they were talking on the phone, making it happen. They agreed to all the terms. You went above and beyond and you explained everything, pros and cons, what you had to do to be able to get that. So, and he agreed. He was like, "Yeah, let's do it." And you got the paperwork started. You got the LLC done.
and this was in the middle of a conference, guys. So we're at an
Yeah.
event and we stepped away, spoke to this person, and I mean, like, we shared the pitch deck, we shared the numbers breakdown, worst case scenario, the
I
exit.
mean, beautiful. It
It
was beautiful.
was like I think we were on the phone maybe for at least around 30 to 45 minutes. And even before that, the person
Yeah.
saw the pitch deck before, which caught their interest. So in going through the pitch deck, they're like, okay, I like this. Then we hop on a phone call and we reviewed everything once more. Questions were asked and all that stuff. And I know some persons might be thinking, okay, why did this lender back out? Was the deal not good? Did you qualify them? All that stuff. For I think when we're having that conversation, the lender too wanted to us to overpromise in terms of what the return would be. And when we underwrote the deal, it was worst case scenario. Hey, this is the worst case scenario, and even the worst case scenario, we can still make you that interest payment. Anything that comes after, it will be a bonus. And I think we switched from that person being a private money lender to we're open to giving equity. And we mentioned that, hey, even in the worst case scenario, and we don't make money, at least your money will be accounted for and you will still get your money each month. And then anything that comes is a bonus. So we explained that in qualifying the lender. What did we do? Um, in qualifying the lender, we found out like where the source of funds was. We also found out like why they want to get into lending and their goals aligned with ours because they wanted to own rental properties. They wanted the tax benefit, the cash flow. Um, what else was there? They have lent on deals before, so this wasn't like their first rodeo. And this was would you say certified professional? Let's say this person was a teacher, for example. You know those popular professions, teacher, doctor, attorney. These persons, like, he was certified. But we did qualify the lender, and then after, I mean, maybe I've seen some signs where they're like iffy. And when, because he's like, draft the paperwork and then I decide. And I was like, no way. Like, tell me if you're in or not. Because guys, at this point, we were gonna go and create a LLC, And it would
Mhm.
cost money to create at least $600 to create that entity. And we're like, if you're not sure, think about it and let us know. And then after, right before we wrap up that conversation, he was like, yeah, I'm in. Even like confirm all the details, text, email, everything I'm in. So we're like, perfect. Went ahead, create the entity. And in creating the entity, he just disappeared. Like maybe for like 2 weeks, not hearing anything from him, no ignoring calls, texts, email, no nothing.
It was really stressful. We were like, wait, we need to close.
Because that's the thing too. Like you don't want to go and start searching because someone already said, "Hey, I'm in." Already went ahead and created the entity and everything. And I think it got to maybe week 1.5, approaching 2 weeks, and then we literally started looking for another backup. We're like, just in case we don't hear from this person, we are gonna have to have a plan B. And we started looking, and then they finally responded to be like, hey, not gonna do this again. I got another deal where the return is 20% and all that stuff. And it's always that lenders always get another deal that's giving super high return, some 20%, 25% in 6 months. It sounds attractive. I don't know if they still went ahead and did that deal, but it's always that would you say call that a shiny object syndrome?
I don't think so. I think this one's like trying to get the newest best thing, you know?
Yes.
It's
Yes.
like,
It was, yeah.
oh, this is better. So, I
Yeah.
mean, that's not bad too. We're not going to discourage you to take a better deal if you find one.
Yeah.
Make your money.
No, it's
But
true.
uh,
But do your own, do your the same. I think I was having this conversation with a lender last night, and I was like, hey, Gator deals, anything that's high return short, I was like the same due diligence that you would take to underwrite a PML deal, like a long-term deal, do that same due diligence because a lot of times you do your due diligence, you agree on the deal, but then you just see another thing that be like, I need 5,000, 20% for 90 days. And you're like, damn, I want that. And then when you start doing more due diligence, so you make that decision, say, yes, I'm going to back out of this deal, go into this one. And then you do your due diligence and you're like, oh, this deal doesn't cut out to what it
and
should.
it's more a risk, right? It just depends what kind of risk you want to take.
Yes, that too. And as long as like if you underwrite it and the 20% it makes sense and you do your due diligence on the person and it makes sense, like heck yeah, go for it. But always just do your due diligence. And I think from that, one of the biggest lessons learned, and maybe I would say reminders for us, is always have a backup plan, like a backup lender all that time. Never stop marketing that deal until, like they said,
Close.
yeah,
He's
like
in.
market it not. Yeah, you could have a lender always market that deal. Maybe you send things to title and they start drafting the paperwork. Yes, keep marketing that deal. You meet someone new, tell them this is what I'm working on now, or would you be interested?
Yeah.
Because anything can happen. That was insane.
Yeah,
That
and
was
just be transparent. I think we've done that before. We're like, "Hey, we have a lender already on this one,
mhm,
but if you really are interested, we can keep you as a second just in case they back out." And that worked out for us. We spoke about that one
yeah.
last week. So,
Makes it easy. And the thing is too, like I think for us is and an advice for anyone if this happens, because you do have lenders who commit, you do have lenders who back out right before closing for different reasons. They could have cold feet, they get a better deal. And then it's harder for you to go to approach another lender to be like, hey, would you fund this deal in 2 days? I had a lender that backed out, guys, especially the private money lenders. These things happen, and as the investors, that's the borrower as well, it's whenever this happens, like try not to focus on the problem or the fact that you don't have money. I think just switch your brain immediately into solution mode to be like, okay, this has happened, now I need to find a solution ASAP. Don't stress and freak out. Maybe freak out for a couple minutes, 10, 15 minutes, walk, whatever it is that you need to do, let the steam out. we're focused on the solution and
Yeah,
get it funded. And I swear to you, every just a reminder too that everything happens for a reason. So
it's
always
true.
remember that, like every single thing happens for a reason. Might not be able to see the reason now, but maybe after you'd be like, damn, I'm kind of glad it did, because maybe there was another lender waiting for you that had way more money, or structure that deal way different. There could be so many different
Yeah.
things.
Yeah. So, hey, yeah, you guys, we encourage you to go out there to go raise capital. So, whether you're looking to raise capital for your next project, launch, or expand a new business, we hope that this episode gave you some tips, strategies, and insights so that you can raise capital and invest with purpose.
All right. See you guys next time.